Let me just start with the price action yesterday. I was in Riyadh monitoring the price action early morning, and up until the U.S. time zone, oil wasn't doing much. And it seems as though U.S. investors walked in, they saw the announcement, they pieced it all together, and they thought it would be very bearish for the oil market.
Yeah, I mean, what determines prices ultimately is supply and demand, and both of them have been not great for oil since it peaked in early April. If you look at supply, you had the OPEC Plus decision, which maybe took time for people to process, because on the one hand there was an extension of some cuts, on the other hand there was some easing of some cuts later this year. The net effect is there'll be more oil coming to the market by the end of the year. There's also supply from non-OPEC places. So if you think about the US, Canada, Brazil, their additional supply will absorb all the additional demand that is expected to come into the market this year. And demand hasn't been great for oil either. The IEA twice revised down its demand forecast for this year. And you've mentioned the US data earlier and how they're getting weaker. And there is also the outlook for China demand for fuel has also darkened recently. So you have supply that's not great, you have demand that is weakening, and on top of this you have geopolitics. Geopolitics lifted oil prices in April when there was an escalation between Iran and Israel, but as the tensions eased, the geopolitical risk premium has basically vanished and is now close to zero.
Yeah, something to watch for sure, and we're going to definitely keep an eye on what the price of oil is doing. Ziad, I also want to bring up Egypt, because I know you've been following all of the developments there very closely. Couple of developments. One of them is political, which is that the President Sisi has tasked the Prime Minister with reforming the government with the aim of putting together a government that is going to be a lot more focused on the structural reforms that the government is trying to push through, or the President wants to push through. How do you see that impact at a macroeconomic level?
I have to say it's limited. The big decisions in Egypt, as far as the economy is concerned, the structural ones, the ones that are related to the role of the army in the economy, the investment in infrastructure that's taking place in the country, and whether it's viable or not, even stuff like the flexibility or not of the exchange rate. These are not decisions that are made by technocrats or people at the central bank. These are political decisions that are made by the president himself. So a change in personnel in cabinet will probably not do much in terms of changing the outlook for Egypt, and we've seen it before. When Egypt changed central bank governor, that didn't lead to an immediate change in the exchange rate policy, which is the most technical of these decisions. It took a while, and that was a political decision in the end.
Now, you put out a story on Friday saying that Egypt are raising the price of subsidized bread. I think this is the first time they've done it in over 30, 40 years. And the last time they tried to raise the price of bread was met with huge riots, and the then government had to back down. What's different today?
What is different today? Well, that story was put by our reporters, obviously, there in Egypt. And Egypt has quadrupled the price of subsidized bread. What is different today is there's $57 billion that have come into Egypt. And that has been a game changer for Egypt. It allowed it to ease the dollar shortages. It may even allow it to basically offset the increase in the price of bread with cash handouts. Let's see if that's going to happen. But I think when you have $57 billion coming into the country, that will help you maybe cushion the blow to consumers.
But inflation is still running at 30%. And so how do they square up the desire to bring inflation down with removing the subsidies on one of their core goods that people consume?
Of course, I mean, economics is all about trade-offs, right? So on the one hand, if you raise the price of subsidized bread, that would raise inflation. But on the other hand, one of the problems of Egypt is they run a large budget deficit. And having subsidized bread at low prices, especially in an environment where they import wheat in dollars and the exchange rate has actually depreciated significantly, that increases the cost for the government. So that also increases the budgetary burden of the government. So they clearly went for the fiscal decision at the expense of potentially increasing inflation.